One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
No place like the New York Stock Exchange. We've got you covered. The biggest stocks, the biggest trends, all the market moves. The Watch List with me, Nicole Petalides, 2 p.m. Eastern on Schwab Network.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network. Schwab Network.
Welcome back to Next Gen Investing. It's time to look at our two charts today with our chart master, as always, Rick Ducat. We're talking the ride-hailing names Lyft and Uber, although unfortunately becoming more and more incomparable on a chart perspective. We'll start off with what has unfortunately been the laggard of the two. Nice gap up after earnings, but now we're sort of chopping around after touching recent highs. So walk us through this chart of Lyft here, Rick.
Yeah, definitely some volatility even after we had this big move up. That happened on extraordinary volume as well. Very, very heavy volume in this move upward that we had on earnings here. And since then, kind of an odd price pattern here, kind of this triangular type shape here with two trend lines converging toward each other. And not really trend lines here. I'm just trying to describe the price action by drawing these lines. These wouldn't be very useful trend lines in terms of assessing support or resistance here, but nevertheless, we can see that we are kind of in the middle of these two boundaries that we've established here. In terms of our overall trend, though, price is above our three moving averages fairly comfortably, our yellow 21-day, orange 63-day, and purple 252-day exponential moving averages here. The moving averages themselves are all tilted upward, so things are looking more geared toward the upside in this name. And, you know, I mentioned the volume, too, because you want to look for high volume on a move like this because it shows conviction on the part of traders. It's more reliable of an assessment of a move when it comes on heavy volume here that's more convincing that it's perhaps here to stay. Now, you know, it's always interesting when you have a fundamental situation, then a period of consolidation. It almost looks like a giant bull pennant type pattern here. So I'd be really curious to see what happens if we get a break above those highs that we reach shortly after the earnings event here. And, you know, once again, not saying this is a bull pennant pattern here. It's just kind of a similar type of price action that we're seeing.
Yeah, absolutely. You can totally see that forming here. So now, as far as the momentum driving this almost bull type pattern we're seeing, what are you seeing as far as RSI?
Well, momentum has been a not exactly what you'd want to see here, because what you'd want to see if you're bullish would be progressively higher highs and RSI also making highs as well. What we got, though, was a peak here that we established above that overbought area here, but trended downward since that point. We haven't really established any new highs. So kind of just matching the price action to the downside here on the RSI. We can't really draw a matching triangle, though, to the upside here. So not exactly matching price action here, but still giving us a useful, potentially useful boundary to keep an eye on. Look for this trend line to be invalidated. That could be a clue we're going to get another push upward forward in price. But, you know, ultimately we'd have to see a break beyond that original high that he established, our 52-week high actually of 1943 right here at this pink line.
So now as far as some levels we're watching here, no earnings on the horizon. We already just had those, and we're up now on the year 16%. So walk us through what you're looking at now going forward.
Yep, and you know, up 121% off our yearly lows of 785. So really quite a strong move when you would consider it that way. And you know, like I said, that 1943 level that I just mentioned, this pink line, that's what we'd want to see price cross above. However, it happens to line up pretty closely with our +2 standard deviation channel. So we've got our blue linear regression line. We take standard deviations above and below that to create these channels. Now we are finding ourselves with a convenient resistance confluence. We've got our old highs and our +2 standard deviation channel near 1930, 1940, around those areas. So that's a key area to watch to the upside. To the downside, we've got kind of a similar collection of indicators here. We've got our +1 channel, then our 21-day EMA. Then we've also got a small gap that formed here. So the pre-gap highs and the post-gap lows lined up at the same point. So around 1650 to 1690 or so would be the area to watch to the downside or so.
Yeah, so lots to look at here, and unfortunately what has been the laggard of the two, but still having a pretty nice year as far as its performance goes. So with this in mind, Alex, walk us through what you're thinking. Example trade-wise, I know we're lower today, but lower along with Uber.
Yeah, I'm looking at something, and I probably, you know, just in a vacuum, you could have made the bullish case, kind of a price target update, overweight rating from Piper, technicals looking okay on the last year, but we're also looking at Uber. So I looked at bearish lift, bullish Uber. We'll kind of compare them together here, maybe a bit of a pairs trade brewing. But looked at a bearish trade lift going out to the April 12th expiration, buying a put vertical. So the stock had a recent pop and has failed to kind of break out to new levels after that jump post earnings. Looking for it to fade back a little bit now as it's eased into this new range. 18.5, 16, so only a $2.50 wide put vertical. $1.25 debit would create a 1-to-1 risk reward where we can make 125 on 125 in risk. 17.25, you find that by going to the 18.5 put, subtracting that $1.25. That's how you get to that break even. So you don't need a ton of downside. It's only like 15, 16 cents away from that break even point on the day. So looking for a move lower, max profit below 16, max risk above 18.5. So a way to also express an opinion on a direction, Jenny, but not having that unlimited risk that like a short stock position or short call would have in the stock. So if the stock does continue to move higher, you know your max loss going in, but it allows the trader investor to express a bearish outcome, looking for a little bit of a profit if the stock does slip a little bit further from here.
Yeah, and I think that's like a very, very important distinction here with this. Example traders, of course, we are capped as far as our downside risk, just based on the parameters being risk defined here. So always important to keep in mind when looking at like potential losses and gains, of course. So now to look at Uber, which has been just a really fun one to watch. Frankly, I remember the long, long days of its path to profitability. It was not making any money. Everyone was upset with the business model. I love a world in which Uber is consistently profitable, Rick, just from following the story along and using Uber myself. So walk us through what you're seeing as far as the chart here.
Well, whatever's going on, shares are benefiting because we're up 163% or so from those lows. And pretty much every time we've had earnings, 3 or 4 times on this chart here, we've had a nice move upward shortly after there. So once again, this last time we had a gap up here, continuing into our yearly highs that we reached near 81.86 was our high point there. We squeaked out some new highs beyond that on the intraday basis here, but that was the initial point that we reached there. So around 82 is where this one topped out here. However, kind of seeing the price action today looks a little worrisome to me here. And I'm not saying head for the hills, you know, whatever, but we can see right here that not only have we crossed below our yellow 21-day EMA, but we're also seeing that the moving average itself is starting to slope downward here. So those are two important signs of potential trend change. And as technical traders, what we're looking for is the earliest point that we're sure the trend has shifted here. And, you know, that's a tough thing to do. Are you ever really sure in trading? Not necessarily here. But this is a clue. This is a warning sign. This is a potential trading signal here that the trend is starting to potentially roll over here. So I would be really curious to see what happens if we break through this kind of intermediate term trend line that begins shortly before the earnings event that we had back in October here. So be on the lookout for a move below the post-gap lows here, 74.31. That would be another very concerning sign.
So now as far as RSI, the overall momentum of this recent uptrend, I know we're starting to sort of see some cracks, but it still looks strong from a longer term perspective. But near term, what is RSI telling you?
RSI is trending down, which is what we would expect during kind of a sideways price movement here. And all this is telling us here is that RSI is that the pace of the gains is slowing down here. However, we are getting perilously close to that 50 midline. That would signify a shift from bullish momentum to bearish momentum then, especially if it were to happen in conjunction with a break below our supportive areas that I mentioned before. That would be certainly something that would be worth taking note of here. So look for RSI. On the other hand, if you're more bullish, you'd be looking for it to invalidate this trend line. So a push above that area, that would be a more bullish sign here. So, you know, whatever your outlook here, RSI can help inform that and can help provide some justification for what you want to do. Just wait for the close and these events here. Wait for the dust to settle. Don't just jump the gun if you see a signal starting to happen, like, for example, crossing below that 50 midline. Wait to see if we close below it.
Right, so now levels that we're looking at here, I know we've pulled it back from those recent highs, and I believe we are slightly lower here yet. Down about 2% a week today, and also down about exactly 1% even here today. So what are we watching now going forward? And of course, with no major catalyst on the horizon.
Well, one other kind of bearish thing that happened yesterday, we formed a bearish engulfing candle, and we're getting the downside follow through today. By that I mean we had a green candle where the real body, the distance between the open to the close, is completely encompassed by the next day's real body, the distance between the open and the close, which is a red candle. So the important thing to look for is follow through to the downside the next day. We are getting that here to some extent. So couple that with our kind of bearish situation that we're having happen with our moving average here. You know, that's kind of a worrisome thing. It's also happening that we're falling below this volume node here, this area of heavy trading. So what do we look for then? As I said earlier, we've got our post-gap up lows and our trend line kind of in the same area, right around 74. So that would be one area to watch. To the downside further, we've got our linear regression line and our